Hey guys, Matt Krieger from Krieger Analytics. Today we're going to talk about the cash conversion cycle. And really what this gets to is I talk to a lot of business owners who tell me, hey, my revenue's increased year over year or month over month, quarter over quarter, whatever it may be. My net income's up. However, none of that corresponds with what's happening with their cash balance, and their cash balance is down. They want to know, why is this happening? And so today we're going to kind of talk through some of the factors that lead to that and some of the things that we could do to potentially fix that. Okay. So every business goes through this cycle, right? At the beginning of the cycle is buying inventory. At the end of this cycle is selling whatever we've turned that inventory into and collecting on that, right? So we're collecting payment. Collect dollars, okay? Now, throughout this, a lot of different events occur, right? So we buy our inventory, and then what ends up happening is our vendor says, hey, thanks for buying the inventory. Here's your invoice, please pay me within the next 30 days. And most of us are good, we pay within the next 30 days, right? So 30 days out here, this is day 0, we pay for our inventory, okay? And let's just say for that inventory, we pay $100,000 for that. Okay, so then what happens is nobody has 1 day of inventory in hand or 2 days of inventory in hand, right? If that was happening, we'd be running out of inventory all the time, especially a manufacturer, right? They're going to constantly have more inventory on hand than 1 or 2 or even 7 days, right? So most businesses have somewhere between 30 and all the way up to 120 days worth of inventory in hand. So this particular client, let's just say, has 60 days worth of inventory on hand. So what does that actually mean? That means from the day they buy it, on general, it takes them 60 days to sell that inventory, okay? So here we have now sold the inventory or whatever we've turned that inventory into. So we've sold our widget, we'll say. Okay, and then what happens, just like up here, when we sell this to somebody, we say, hey, I'm going to invoice you today, and you're going to pay me in a certain amount of days. If we're really good, we can collect that, net 30, right? However, we all know that we have late paying customers, and so generally this might end up being 40 days out, right? So at day 100 now, we finally collect our money, okay? So we had a 30-day period here where we were forced to pay our $100,000. We had another 30 days where it took us to sell that, and another 40 days after that to collect. Okay, let's say we sold our inventory for, let's just say $200,000, just to make our numbers easy here, right? So we made $100,000, that's great. However, here's what ended up happening, right? And here's why we're showing this great net income, revenue. We're showing this great net income, $100,000 net income, right? That's great, 50% margin on that net income, wonderful. We all love a business that dropped 50% to the bottom line of our net income. However, if we talk to this business owner here on day 45, they're going to be fretting out, right? They're $100,000 out of pocket. They either got $100,000 worth of debt sitting out there, they had to put $100,000 worth into the business. They're kind of freaking out at this point. Talk to them on day 75, right? Day 75, they are now a month and a half in of having $100,000 of debt on their balance sheet. And they're like, when is this going to be done? When is my customer going to pay me, right? They're actually incurring real costs with this. Because if they had to go out and get a line of credit, there's interest they have to pay on that, right? So it's not until day 100 that all of a sudden, oh, great, now we got this $200,000 back. We can pay off the debt. We can pay myself back if I put the money in the business, whatever it may be. We can pay our employees, during this time here, right? Because we have payroll going on. We're having to pay our marketing people to sell this, right? We have rent that hit right here, so we're having to pay our rent. So we have all these bills to pay, right? So it never feels like we have enough. And then all of a sudden what happens, we start this whole process again. Or more likely what's happening is it's never this simple, right? We never have a business that just buys the inventory, sells it, and we sold it, now let's buy some new inventory, right? We're constantly having to buy inventory and sell inventory during this period in order to make it work, right? So that's what's happening to our businesses that are constantly showing increases in revenue, increases in net income, shortages in cash, is this cycle's going, right? Now, to some extent, this cycle is always going to be out there, right? But there's some things that we can do to make it less painful, okay? So the first thing we can do is, what if we talk to this vendor here and we said, listen, we love your product, we're going to be buying $1 million worth of your product a year, or $100,000 of your product a year, or heck, $15,000 worth of your product a year, right? However, I want to extend my terms with you. I want 45-day terms. Okay, so let's see what we've done here now. Now all of a sudden what we've done is, instead of it originally, I'll put the original number down here, instead of us having this original 70-day cash gap, right? We had a 70-day cash gap from the time we had to pay it to the time we collected it. We've now cut this down to a 55-day cash gap. And you might be saying, yeah, hey, that doesn't solve my problems. I still have to finance $100,000 worth of inventory before I can sell it. But it makes it better, right? I mean, 55 days is better than our 70 days. And we're not done. We're going to come in and we're going to talk to our accountants, to our CFO, to our sales team, to our production team. We're going to get them all in a room and we're going to say, hey, we need to manage our inventory better. We can no longer handle or hold 60 days worth of inventory. We want to improve that by 25%. So in other words, we're going to make that happen on day 45 as well, okay? So if you notice, now all of a sudden we're paying and selling our inventory on approximately the same day, right? Now, what this naturally did, if our customer's still paying, so this was originally, if our customer's, still paying, let's say within 40 days, we've automatically cut this down to 85, and now all of a sudden we're only 40 days. We've cut off a whole month of having to finance this, okay? Then let's say we go out and we hire super AR clerk Brenda. And what Brenda's really good at is Brenda will call out to customers and she makes sure we get collections within 30 days. We also sit down as a group and we start implementing some policies. So for instance, we're going to tell customers, hey, if you'll pay net 10, so if they'll pay within 10 days, we're going to give them 2% off, right? Or we might say net 30, 2% off, whatever the policy is. What I'm getting at is what we're going to do is we're going to improve our AR collection cycle, right? So all of a sudden, instead of this being a 40-day cycle, we're going to get this down. We're going to be really, really good. We're going to make it a 25-day cycle, okay? So 25 gets us to 70 days, okay? So now look at this gap. We just went from a 70-day cash gap to a 25-day cash gap. So we've essentially improved our cash flows, decreased all of our financing costs. Because remember, we don't just have to finance this inventory. Remember all that other stuff that goes on here. We have to finance our marketing team's salary. We have to finance our rent. We have to finance our utilities, our insurance. All that stuff is coming due here before we collect that $200,000, right? We're constantly having to finance that. And so now we've reduced that period that we have to finance it to 25 days. The other thing that we can do with this is we can manage our cash and our capital a little bit better, right? So in other words, if we know that this is our cycle, we can go out and we get some short-term financing arranged at better terms with our bank than having to go out and finance this through other sources that might be a little bit more taking advantage of our stress, I guess, if you will, right? So we can go out and we can put a, let's say, $150,000 credit facility in place to finance this and anything else that comes on here, right? And that can just constantly be in place so we don't have to necessarily worry about cash flow shortages like we're having to worry about now. So that is the cash flow cycle, and that is a couple real high-level strategies in terms of how to manage that. You might be saying, how do I get to this? How do I know that I have 45 days to pay my invoice, or 45 days of payables sitting in my balance sheet at any time, or 45 days of inventory sitting in my warehouse at any time, or that my whole cash collection cycle is taking 70 days. And that's where you really got to sit down and you got to talk with some sort of finance or accounting professional, because they're the ones that can really quickly look through your financial statements and start giving you some of this data you need to make better business decisions, so at the end of the day, we can make more money, right? So sit down, talk with your accountant, with your CPA, with your CFO, with whoever you're working with now. If you don't have anybody, find somebody, because this is something that really can have an impact on your business and have an impact on your cash flow, and at the end of the day, an impact on your sanity. So thanks for listening. Hope you enjoyed. Watch some of our other videos. Read some of our blog posts at www.kmcc.com. kanalytics.com. Otherwise, if you have any questions, feel free to email me. I will talk to you later. Thank you.